Welcome back, everyone, to Stock Market Weekly, episode 726. I'm your host, Evan Medeiros. Hope you're doing well out there. Thanks for tuning back in. I'm feeling pretty good. Good trading week and a busy week. So let's get right into it. Front and center, bears fumbling their chance to break this market down. Look, we've been talking about this for the past 5 months, 6 months since the Q4 2023 lows. It has been really difficult to find follow-through selling in this market. Thursday, the stage was set perfectly. We had bearish engulfing bars pretty much everywhere you looked. We had harsh, hawkish rhetoric out of the Fed. We had a jobs number looming. It was just the perfect excuse to sort of take this market down a notch and reset some of the froth. And we couldn't. Friday, we popped right back up, and in this sideways range we continue. So we're going to look at those charts a little bit later. Meanwhile, commodities continue their bull market in full swing. We've been talking about all of those markets: gold, oil, silver now joining the party. So lots of stuff going on there. Energy, materials, basic materials, all are the leading or best performing relative sectors this week for that reason. Meanwhile, we had Tesla, which continues to have a darkening story here. They reported their first quarter delivery numbers, and it was, I believe, the first decline in quite some time. We're going to look at that chart in just a little bit. Meanwhile, we also have Treasury Yields, which are breaking back out to the upside, which is not the most bullish development there if you are an equity bull. So lots of things to cover in this week's episode. Stick around. Charts coming right now. All right, here we go. We've got some charts in front of us. Before we jump into our routine, though, I do want to just mention a brief offer here from our sponsor, Investors Business Daily. So for the next few days this weekend, they are running completely free access, no credit card needed at all, to their MARKETSURGE platform. If you're not familiar with MARKETSURGE, it's the MarketSmith platform, rebranded recently. And this weekend, you can get access with a link in the description of this video to this platform. Take it for a test drive. Do some homework this weekend on your favorite stocks. I love TC2000. I do a lot in there for all of my technical studies and watch lists. But when it comes to fundamental analysis, or if I need to understand a company's profitability or where they're going as a company, I use MARKETSURGE for that, because they have so much more information in terms of EPS numbers and just up-to-date fundamentals, and I can track that with a lot of these overviews and studies. So take advantage of the offer. Investors Business Daily is a sponsor of the show, so thank you to them, and there's a link in the description of this video to get access to their MARKETSURGE free access for this week. Now let's get into the data. Here on the right-hand column, you can see 1 week returns were negative right across the board. Every U.S. index was down this week. Dow Jones and the Russell 2000 were hit the hardest, down 2 to almost 3%. S&P and Nasdaq were down about 1%. You can see our volatility indices also ticking up now. So the S&P VIX here up at 16. We haven't seen a 16 in quite some time, so up 3 points. And Nasdaq vol is getting closer to that 20 level here. So certainly getting a little bit of fear and protection being put into this market. If we look at sectors here, 2 sectors in the green, and really this is the standout and one of the key themes we're going to be looking at in today's video. But energy and energy stocks up 3.88%. We had communication services also up nicely this week, up 1%. And then materials were in the 3rd spot, basically flat this week, along with industrials. Downside was healthcare, real estate, consumer discretionary. Those were tough spots to be, down about 3% this week, and now moving negative over the past 1 month returns. If we take a look here at our sector trend, so this is a smart trend filter indicator that we've built out here for TC2000 users and TradingView users. You can get it on our website at thetraderisk.com. We've got a couple of transitions happening here. First off, in consumer discretionary, you can see we're getting rolling over here, getting some yellow and red dots printed. So the trend is starting to change on discretionary. Same thing with real estate. We were trying to get our act together here, but with this breakout in rates and some of the pressure that we're seeing now in this rate sensitive sector, we're starting to roll back over and printing sell signals or sell dots here in the XLRE. Same thing with healthcare down here. We're getting fresh breakdowns in these sectors, and you can throw biotech in that mix as well, and consumer staples. This is the most kind of breadth, let's call it destruction or weakening that we've seen in quite some time now. We are getting a handful of sectors here that are weakening up. So it is a time to pay attention. We led with the story, of course, that bears or sellers failed to break this market down, but let's not forget that they can come back swinging next week, right? So we need to just keep an eye on our risk management. I think this is going to be a crucial week here. So a little bit of changing here in terms of sectors. If we go to market breadth, you can see our 52-week highs and 52-week lows, which we always spend some time looking at every week because I think it's so important to keep an eye on. You can see that the number of stocks hitting 52-week highs starting to kind of taper off a little bit here into the second half of this week. Meanwhile, number of stocks at 52-week lows not really reacting just yet. So we are seeing some, let's say, upper level trend changes in some of those sectors that we just identified, but we're not quite at the point where a lot of those stocks are really breaking to new 52-week lows yet. We're going to need to see more selling, more sustained kind of breakdowns before you start seeing an uptick here. So we'll continue to keep an eye on it, but so far ratios hanging in there in terms of the bull side tipped in that favor. Now, if we go to commodities this is the big story, of course, here. Everything seems to be working if you're in commodities. Silver really stole the show this week. So this was up 10% now. I was kind of sleeping for a little bit. It was, grinding up a little bit, but really getting some big momentum, up 10% this week. Copper up 5%, oil up almost 5%, gold up almost 5%, and natural gas, hey, even that was up a little bit. And of course, we know that likes to do its own thing. The only thing in commodity land, really, Bitcoin was down this week, about 5% or so, still stuck range bound. We'll talk about that in just a little bit. And last here for the data is Treasury yields, and we talked about the pressure now that we're seeing. 5, 10, 30-year Treasury yields all moving higher here. The 10-year yield, in fact, back up to about 4.4%, one of the highest we've seen now in many months. So we need to continue to keep an eye on this as the Fed is looking to be a little bit stickier. At least that's the rhetoric they're giving right now, that we may not get as many rate cuts as the market was pricing in, and inflation might be here and stickier longer than expected. So let's get in now to some individual price action. Let's take a look at what's going on here in S&P 500 land. You can see on the weekly chart, we did get a slight uptick in volume. Remember last week we had the holiday shortened week, so the volume was a little bit lighter. So we did get an uptick in volume. It did come on a down week. We did close below, right at or below last week's lows. So we did finally kind of get some minor pressure here in the S&P 500. Let's clean this up a little bit more, expand the view so we can see it. And you can see, though, this is, kind of the fourth week in a row, if we go down to a daily chart, that we've been meandering sideways pretty much around this 51.50, all the way up to about 52s range for quite some time. The slope of this trend in the S&P and especially in the Nasdaq has gone from, straight up vertical to now a little more narrow, and now it's starting to really kind of flatten out here. And so this session on Thursday, take a look at this bar now, is what we were talking about at the top of the show. I mean, this was your hallmark kind of open high and then slam them down, sell them all day, close at the lows type of trend reversal that really could have picked up momentum with some ugly gap down with, the hotter jobs number that we did get on Friday, but we just didn't see it. The positioning here, I think the flight to safety, the 1 foot in the, in this market door, 1 foot out, is keeping this market from breaking down. Now, I don't think it means we should get complacent, because I don't think we're out of the woods yet. We did escape a breakdown here below 51.50 or so. So we'll have to still just keep an eye on these levels as the market continues to grind sideways here. If this turns into a topping pattern of 5, 6, 7, 8 weeks plus going sideways, then we're in kind of a world of hurt in the next few weeks or so. So for now, when we look at a weekly chart, we still have a trend that's up but losing momentum. On the daily chart, we still have more of a short-term kind of sideways range here, and we're going to need to see really this 5140 area, and then 5100 is really the bigger level, cracked to the downside, broken below to get a more substantial pullback or retracement in this market. So far, we do not have it. We're seeing sector rotation and bids, continue to kind of, come right back in line here as soon as the pressure really starts to dial back up. Now, if we take a look at the Qs, we've got a lot more sideways going on here. Take a look at this. Again, zoom out. Let's take a look at the weekly chart first. We had this up, super strong uptrend for November, December, January, February, and ever since February, we've been more on this sideways sort of grind here. I know I've got a lot of drawings on my chart right now, just highlighting these ranges, but really when we look at price action now, the Nasdaq 100 has basically gone nowhere for conservatively the last month and a half, but I could argue, really the last 2 months or so, the Qs have gone nothing but sideways, nothing but frustrating a lot of folks. And what this really sets up is volatility expansion, right? When markets move sideways, when we do lots of overlapping of the same levels back and forth, up and down in a 2, 3, 4% range, price eventually wants to get away from that. Price eventually breaks out. So we are waiting, and we should be on alert at this point for some type of vol expansion event. Take a look here again at this open gap that remains open. We've talked about it a lot on this show, and you can see right around 433 in the Qs, QQQ ETF, is when you start to reach and kind of come back into this gap. This gap fills all the way back down here around 426. Still haven't, we still haven't gotten it yet. And I would still be using that 433 gap entry as a technical level to really sort of brace for impact if we start rolling over from there. Qs, though, still stubbornly sideways and frustrating a lot of folks, I would say. Russell 2000, kind of similar situation. Again, it keeps poking its head up above this 208, 209 area, and then it gets slammed back down. It's not giving a whole lot up. It's still mostly sideways here. The structure of the Russell 2000 is very different. We're not up at highs. We're still at the upper end of a big breakout, a big range for the Russell 2000. You might as well consider it all-time highs, because if it starts clearing above 210, it gets to all-time highs probably in very short order, as that momentum would really sort of surge. But so far, if we look at the Russell 2000, you printed kind of a bearish engulfing weekly bar, and again, just feels like it needs to cool off here, and it might just need more time between this 190 and 210 area before it can really attack to the upside. So that was really the high level kind of market top-down indice analysis there. Let's take a look at first the VIX, because we did see a few points of higher prices here, and this is really the highest reading we've gone into a weekend, or really a sustained close, in quite some time. This is a weekly chart of the VIX, and you can see going into the weekend at a 16 essentially puts it at the highest level that we've seen since November of 2023. So there is some fear out there. And again, I think that's what, smart folks that are looking for cracks in this market are bracing for. And it just continues to leave us in this sideways range. So VIX up around 16. If we get some follow through there, if we get a sustained move over 17 or 18, that would probably coincide with a market equity breakdown of those short-term levels we just talked about. And then that's where you can get a little bit of a spiral of more larger selling blocks coming through. So that is the VIX there. Let's move it to commodities before we look at a couple of individual stocks. So oil here, front and center, up 4.66%. We were tracking oil, but it was kind of a sleepy one here. We noted it on the breakout. We noted it on this, kind of upper tail rejection here. Last week, it started to grind up again, and that was enough now to get it towards the top end of this range. This is coinciding with about 85, or I think it's over $85 a barrel now, for crude oil. So we are breaking, or in the process of breaking, to new 1.5, almost 2-year highs at this point. We're starting to take out on a weekly closing basis using the USO ETF. I'm not looking at futures, of course. It's starting to take out these October highs. So this is where now, if we throw in Bollinger Bands, this was interesting as I was, prepping some charts for this video. Take a look at the weekly 2 and 20, or I guess I've got, let's switch it to the 2 and 20. 2 and 20 Bollinger Bands here. We are above the top end for oil. If we go to gold, we are well above the upper Bollinger Band for gold, GLD. If we go to silver, we are well above the upper Bollinger Band here. So we have lots of excitement, some froth here in commodity land. I don't know that it's I'm certainly not advocating that we should be going out and shorting this. It's probably the other way around, but it's not an early move at this point for a lot of these commodities. They are moves that have seen a pretty substantial, price advancement at this point. But oil got that nice trend momentum here. It's up like 6, 7, 8 days in a row. So again, very, very tough chase, but continues to work in this environment. Let's take a look at gold. We have been talking a lot more on this one here, and this just continues to break out very magnificently here. This monthly breakout, I mean, everything was really textbook here in terms of just the orderly technical structure of sideways consolidation, range, compression, and then volatility expansion. And here we are, we're in that expansion phase. We're in that markup phase where price discovery is moving up for GLD. So congrats to the long holders there. Do have positions in GLD in a lot of our, or in one of our trading systems, I should say, not a lot. Have some gold miners in another one. So GLD continues to work. Wouldn't really say it's a good chase, but it's certainly something to keep an eye on. Silver, we already sort of mentioned here. This was the emerging breakout here. And this one, again, weekly chart. Look how primed this looks as we take a look at the last multiple years of price action. SLV could just be getting started if you have a long enough time frame and you can tolerate the daily bar retracements. Then this is something that's a little more actionable and moving here. Take a look at the weekly volume in SLV as well. So this one is quite interesting here on an actionable longer term breakout for SLV. So that one there is interesting. Same thing with DBA. We were talking about that the last couple of weeks. This continues to accelerate here. Very extended. Can't advocate chasing this at this point, but certainly something to keep on the watch list for when it starts to cool off. Let's take a look at Bitcoin real quick. You can see this looks obviously a lot different than some of those other commodities. You could also argue that it started its run a little bit earlier. So Bitcoin suffered a pretty good sell-off here right at the start of the week on Tuesday. You can see Tuesday was the start of the week with the holiday short week. Actually, no, the short week was Friday. So Tuesday was the second trading session of this week. And you can see we had this big gap down in IBIT on the right-hand side. And we did end up recovering most of that gap, and we filled in there nicely on Thursday. But we are still very comfortably kind of moving sideways here for Bitcoin. Hasn't made up its mind. I wouldn't be surprised, frankly, to see another retest of 60K before we're out of the woods here. And I still think it could remain very healthy, even coming all the way back down to 60K, 59K, washing out some more, froth and excitement before it potentially starts its next leg up. So I still have a position in this. I treat this more as a long-term trend following approach. We have a trading system that trades this in that long-term trend following approach. So that's the way I'm kind of sticking with and risk managing this position for now. Looks like it's comfortably kind of consolidating sideways. So all that said, let's get into some individual stocks. Let's start with the good this week. I wanted to highlight a couple of strong stocks, and that's Meta. Meta here looks nothing like a lot of these other tech stocks at this point. It's really doing its own thing. It's weekly closing at fresh highs. Heavier volume came in. It was up 8.6% this week. Let's look at this daily chart here. Now it's certainly up 4 days in a row. In fact, one of our trading systems, our short-term swing trading system, Lamerick, did get a really nice entry in this around 480s. It ended up selling it on Thursday at some price over here. That's its motive, though. It's basically a short-term swing trading system, so it's doing exactly what it's supposed to do. But on the longer term perspective, this is a stock now that is back to all-time highs. It's really sort of just dominating in terms of market share, just taking market share away, and continues to work here. So Meta, nice breakout in a very tough tape for technology. This was doing pretty good. And same thing with Netflix, a very similar look here. As a weekly chart, again, you can see getting back up to those prior 2021 all-time highs. It was up 4.5, almost 4.8% this week. So again, very good move here, cycle highs, good close, and both of those stocks standing out to the upside. Now we look at a stock that's not so hot right now. I had a few of them, but we might just keep it to Tesla to keep the video length in check. But Tesla is, of course, now in all of the news outlets with its Q1 2024 deliveries were out this week, and we saw a decline. I think it was the first decline in quite some time, and it was about an 8% decline, coming in around 387K vehicles delivered. And if we take a look here at this stock, I mean, it's not like it's just entering a downtrend. This news, or the market, has been sniffing out this slowdown for quite some time. And so we get this decline number, and we are starting to see sentiment really pile up on the negative side. And so it is interesting here when I look at Tesla, when I look at its structure, it has not participated in this market uptrend for quite some time. I mean, it topped out in late 2021, and it's been in a, you know, anywhere from a 20% to a 70% pullback for the last 2 years is basically where it's been perpetuatingly moving in, you know, oscillating between. So we're now down around, what, 60% off of its prior highs. Sentiment's building quite negative here. Numbers are starting to get aggressively bad. I don't think Tesla's story is ready for a turnaround, but I would certainly be watching this here to see if it can turn around and start to settle in later this year. I think it probably still needs a few months. I don't know what the catalyst would be at this point. If we look at the short-term technicals, it looks like it's got a fresh breakdown kind of imminent here to start making fresh cycle lows in this recent cycle. There is also a very large gap still open back here from February, January time of 2023, which fills in around 146 or so. So I mean, even in a short-term kind of target here, that would put us about another 10, 15%, 10%, 11% pullback in Tesla. I would not be surprised to see that really take place here and fill up over the next few weeks. I like the potential for Tesla as a longer term kind of position trade or investment, but still not at these levels. And if you're waiting for some of the fundamentals to align, it's probably not going to be until later this year or early next year, which is quite some time. So Tesla really getting kind of hammered here. I think it's one of the worst performing stocks in the S&P, certainly in the large cap index. So continues to see lots of pain. I think technical still pointing to downside here. So beware on that one. And I think that is everything I wanted to say. Actually, I wanted to just round out with our strongest and weakest TC2000 layout. So it's a layout we have on our website, which you can download if you're a TC2000 user. And I thought it was, you know, interesting, and again, really kind of speaks to what's working right now. If we just take a look here at the industries that were the best performing this week. Let's see if I can pull this off for a second. Best performing industries this week. Take a look at this list here. So we've got silver, we've got gold, we've got aluminum, we've got oil and gas, we've got copper, oil and gas, oil and gas, oil and gas, oil and gas. And then you finally hit something else on the 10th industry here, which is internet content. So the top 10 industries this week, all in that basic material, sort of commodity driven, commodity producers, or in that space. So that's really what was working this week, and it just illustrates it nicely to look down this list. And then of course you can pick apart all the individual stocks that are, you know, fueling this rise. So I think that is everything I wanted to talk about in today's video. Let me know your thoughts in the comments section below. What did I miss? What are you watching this week? Don't forget, MARKETSURGE, that offer is in the description of this video. We also have a lot of other links to our TC2000 storefront, our trading systems, our email newsletter. All the goodies are in the description of this video. So thanks as always for tuning in. Hopefully this was helpful in preparing you for the week ahead. Have a great weekend, and we'll see you back here next week.